value creation and investment.
Welcome.
That is value creation slide.
It's okay if you don't want to use it, Sandeep. But if you remember, this was
Yes. Hello everyone. So I want to introduce what is the valuation. So I think so everybody is familiar with word of value. What is value? Value is what we invest today and what will be
This
the
way, the woman said it. What is value in command? Value.
value.
Okay. Good.
Okay, so value of today, if we invested 1 million, what will be the value of tomorrow of that 1 million? Okay, so let's take the example. After 1 year, if we invest today 1 million, the value can be 2 million, 4 million, 8 million, and it can be 500,000. It depends how much revenue, sales or turnover we make in the year, how much profit we make in 1 year, how much assets we make in 1 year. Assets, we have fixed assets and current assets. Fixed assets like table, computers and other technology. Current assets is we are all. Okay, and the valuation is also depend on brand building, how much we have build our brand, and also the company goodwill. What we are going goodwill, how you make your goodwill by after sales service, how you are nice with your customers. So that all depend on the valuation. So our target is for valuation to make the multiple method, use the multiple method of valuation to build the brand value, to make maximum profit, to minimize the expense and generate more sales. So we are going to generate the sales. How? We are not have only one product. In 2024, we are going to have multiple of product lines, including car loan, car insurance, car warranty, after sales service. So we have multiple of products. So we are going to introduce this one in 2024. We have the target of minimum sales target is 2.5 million minimum, and our sales target is around 4 million from all the product lines. So that's how we are going to generate our value of the company. So I think so if I check my data, so minimum our target to make 30 million valuation of the company, and our target is valuation is 40 million. Minimum valuation is around 25 million. So if I take the average valuation is coming around 30 million. So that is all about the valuation. Okay, the next part is investment. Investment, okay please. Okay, my plan in 2024 to invest in the loans, car loans. Okay, next please. So, okay, car loans. Who gave the car loans? They gave the government banks, private banks, and financier, who are the main lender in the market right now. Next, please. Okay, so car loan, especially the customer, they look for the interest rate. So interest rate is depends on your loan amount, your credit scores, and also your credit period. So every bank, they have different interest rate, starting from 8.5 to 24%. Next please. Okay, if we will say why they have the difference in the interest rate. Okay, so government bank, they have the equity of 100% of government. So that's why they work also for the social welfare of the society. So that's why they give the minimum interest rate. If we go to the private bank, they have like some foundation. By Reserve Bank, they decide the ratio that 23% they have to keep the cash ratio, cash in hand, which is not non-performing assets, and also 8% they have give to the Reserve Bank. So like they have 70%, they whatever they put the 100%, they utilize only 70%. That's why they give little bit higher interest rate. And financer, they have the 100% equity. If some people they don't get the loan from government bank, also the private bank, they go to the financer. Why they go to the financer? Next please. Okay, if you see the government bank is 8.5 to 12.5, that is the interest rate. Depend on your credit scores and also depend on your credit period. Okay, if you go to the private bank, they charge from 12.5 to 16.5. Also depend on your terms and conditions. If you go to the financer, they charge like 16.5 to 24%. Okay, if you check the process, how many days they take? Government bank, they take from 2 weeks to 4 weeks. If you need the loan within 1 week, where you will go? You will go to the second option. Even you have to pay more interest because you need it at that time. Okay, so private bank, they charge, they take the time around 7 to 10 working days. If you go to financer, they take only 3 to 7 working days. But if you check the interest rate, so why? Because government bank is easy for government employee to take the loan. For private employee, it's not easy. Why the people, they go to the private bank and financer? A businessman and other private people, they go to the financer. Why? Because a businessman doesn't care about the interest rate, because he is paying the profit tax. So whatever he will pay the interest, he will file for the interest, he will book as expense, so his profit tax will come down. So he doesn't care, he take the loan from private bank or he take the loan from financer. Okay, next please. Okay, so here the method they use by the bank. How they use the method? Government bank, they use only reducing balance method. It means if you take the loan 10,000, you pay 1,000, next month they are going to charge you 9,000. They are not going to charge fixed rate on the 10,000. Next, back please. Private bank, they use both methods, depend on the situation, your credit score, your credit period, and the way you deal with them. So it depends. So they charge from 12.5 to 16.5, and they use both methods. Financer, they charge 16.5 to 24%, also use the both method, but 99% they use the fixed interest rate method. Why they use it? Okay, next slide please. Okay, what is the difference between these methods? I take $100,000 for 12 months. My interest rate is 8.5%. Okay, and I use the reducing balance method. So if you will see, my interest rate which I have to pay is 4,664. But the same amount I take from the private bank and I use fixed interest method. So what interest I'm paying? 8,500. But this one, normal people, most of people, they doesn't know. Only 10 to 15% they know the difference. Why which method they use? Government bank, they will say, okay, I'll give you 12.5%. Private one, he will say, okay, I'll give you 8.5%. We people, what we will say, okay, interest rate is 8.5%. So we will go to the private bank. But they doesn't know which method they use. This deeply nobody knows. Okay, so that is the difference where the both methods. Okay, next please. Okay, cash inflow and investment plan. If I invest 100,000 USD, what I will get in the first month? I'll get 8,333.3 USD as a principal amount. In the first month, what interest I'll get? 1,500 USD. Admin fees, suppose I give 5 loans, like 20,000, 2.5% admin fees, processing fees, and service charges. So $2,500 I'll take just to give the loan in first month. That will be my first month income. So my cash inflow will be the first month is $12,333, and the next month I'll put another $100,000 as an investment. So I have the money to reinvest is 112,333. So my investment money, how it's going to be work for the long term, for 1 year plan. Next please. Okay, here you can see in the first month I gave 100,000 5 loan. Admin fee I received 2,500, but first month I'm not going to receive the interest because after 30 days I will receive the interest. So second month I give another 5 loan. I receive again admin fee $2,500 and I will receive the interest from this amount. From this amount I will receive the interest. So my net cash flow is going to be 9,833 and my reinvestment is going to be 14,833. Okay, the cycle will be like this one. From second month, you will start to get the compound interest. It means your interest, whatever you are getting, you are investing again in the business. So that's called the compound interest. So end of the year, if you will see, my cash inflow is 145,534. So it means I can give, if 5,000 I take the admin fees, is coming like 150,000. So I don't need to invest at that time. In 150,000, I can give 8 loan of 20,000. So till here, I have to invest. After that, I don't need to invest after this. Okay, what do you think in 2025, what will be your revenue? And how much will be money you are going to gain if you are going by this method? Next, please. Okay, in 2025, we planned to build another company, as I had a word with my CEO, and he agreed that yes, we can plan for it. So we gonna have a Liberty Finance Co Limited, and then the estimated cash inflow in December 2025 is 600,000. I will receive from my loan amount every month. That is not the interest, that is cash inflow. That money you can invest every month. Every month, the December I have 600,000. In January I have 650,000 to invest again in the loans. And my estimated revenue will be 650,000 in 2025. Okay, estimated loan will be around 30 loans every month, to give minimum 30 loans every month. Okay, after that our next plan is to launch in 2025 also another car loan. We have already launched home loan and personal loan. Whatever cash inflow we will get, the part of this amount we will invest in home loan, also the personal loan. Okay, if we suppose we don't have the money to invest in a home loan and car loan, personal loan, and the all 600,000 we are investing in car loan, we get the demand of the car loans, and we are the sort of fund. So what will be our plan? Next, please. We are going to launch another product is insurance. Insurance, we are going to work first in the car insurance. Okay. And the next target is life insurance and health insurance. Because this is always, insurance is cash inflow. You get the money from insurance. You don't pay for that. So whatever we have the money from cash inflow, you can see the car loans, and you will get the from life insurance and also health insurance. How they are connected to each other. If you want to buy a car, you also need a car loan. You also need the car insurance. And then we have the customer background. Now you will see most of people, they buy the life insurance also, the health insurance also. So we have our targeted customer. We don't need to look out for the new market. We have already made our background in the insurance. So we can pick the clients from there, and we can invest the money from we can get the money from life insurance, health insurance, and car insurance. That gonna be our new investment. And the new investment we are going to invest in where? Home loan and personal loan. That is my next plan. So I think so this is our plan for if we look for the source of investment, if we don't get the fund from anywhere. So we have the second hand to generate the fund, which is our next product is insurance, and hopefully soon we are going to work on the insurance. Some part of area we have already worked, but I think so Mr. TK, he has the expertise in insurance, and he worked almost like 3 to 4 years in insurance company. He's not around right now. So we are going to sit together and we are going to develop this product as soon as possible. Next, please. Okay, what we need to do this one, because we want to have this product and we want to launch it in 2024. So implementation. Okay, define your goals. I have already defined my goals, that we have already defined our goals, that we are going to deal with car loans. So that is our goal. Okay, conduct the research. Miss Nam, she is working on it, and we have very strong data from the research. So I think so very soon we have the good research from there. Okay, map out the risks. What can be the risk there? Risk is only the bad debts, and the bad debts ratio is just only 1% there. And you know why do you get the bad debts ratio in finances? Because of our mistake, because of our documentation, because of our internal approach. You don't complete your documents. If I'm the employee of a financial company and I have the friend here and he approached me, please give me the loan from your company, and he's not qualified for that, and I approach my company, please give him the loan, and from where you don't complete your documents, you don't check your rule and regulation, and you give him the loan, and that's why you have the 1% bad debts ratio here. So that's why we have to map out the risk also. Schedule the milestones. Schedule the milestones is how far you have been reached. Check your daily performance, how far you have been reached to implement this strategy. Okay, assign the task. Assign all the department tasks. Okay, my task is to generate the fund, to find the budget. That is my task. Marketing department task is to sell the 5 loan. Legal department task to complete the legal documents. So that is IT department task, how we are going to implement on car apps. So that is our departmental task. Okay, last is allocation of resources. Whatever the resources we need, we have to allocate. We need to find the resources, that all the resources, they are available in the market, that we can launch it as soon as possible. Manpower, fund, planning, anything related, customer, that is the allocation of resources. And some key point that we have, what we need to implement this one, like teamwork. Everybody have to come together to work together as a team. Okay, departmental goal. Every department, they have to set their own goal to reach the target. Next is team role and responsibility. Every team, they have to take their responsibility that they can achieve their objectives. Okay, deadlines. We're supposed to have the deadlines that, okay, this time, end of the December, we are going to launch this product. So our product should be ready end of the December, and in January, we are ready to go in the market. Okay, next, sorry here. Use of technology. How we are going to use the technology, how we are going to implement it in Cards app. Okay, change of law. We have to check on the yearly basis, because every government, they change every time the laws. They come with new laws, they come with new benefits, they change every time the governance law. So also we have to focus on that. Avoid the common mistakes. Everybody makes the mistakes. We are the humans. So we have to learn from each other, that we communicate very well to each other and we don't make the mistakes. We reduce our common mistakes. Okay, for that, what we have to do, we have to be flexible and proactive. You have to be flexible and proactive. Whatever you want to do today, you have to do today, and you have to talk on daily basis with your colleagues or your team. Okay, communication is the key. Of course, if we have the communication gap, we are not going to have a good results. So we have to have a good communication with all the departments. Okay, track responsibility. Every department responsibility is to track their daily teamwork, check what they are doing, how far they have reached. Daily workflow, same thing, that you have to assign your task on the daily basis. Okay, today I have to do this thing, and make sure you complete that things today. That's all about this one. Thank you so much.